What's up, everyone, and welcome to another cryptocurrency market update. In these videos, we will be going through different cryptocurrencies to help you learn how you can use technical analysis to forecast price movements in cryptocurrencies and generate profit. In this one, we're going to be looking at Bitcoin as well as Ethereum, so let's get into it here on the weekly time frame. So, weekly time frame for Bitcoin, looking pretty good in my opinion. We got increase in bull volume here. As long as we close this candle with the close above the open, that'll give us a white candle, and that will mean that the volume will indeed stay green. That's what we want to see. I would imagine that over the next day or so, we're not really going to see too much in terms of increasing in price. We'll see, but I think next week is going to be where we really shoot through this R3. And if we look at the daily time frame, this is why I think that is. So if we look at the 2-day time frame first, let's look at that before we look at some other stuff. If we look at the 2-day time frame, this blue zone is our main support zone. And how do we know this is our main support zone? It's a very clear trend here with a low, high, higher low, higher high, with 2 candle closes above the key high right here. And so we take the last candle where people were selling off, which is this black candle. You can see that with the red volume here. That was the last one with red volume. And this is going to be a very strong support zone for us because people were selling their Bitcoin here. So now if we come back to this zone, people have an opportunity to rebuy that Bitcoin. And that's what some people will indeed do. And, well, we assume that at least. And so that will be where there's going to be very strong support. And that starts at about 59,690. So if we go to the daily time frame, I'm just going to move this over to here to this white candle. So this white candle is our support zone over here, and we're going to color this gray because this is a support resistance flip zone. And how do we know that it's a support resistance flip zone? Well, we had this bear trend right here where we had a high, low, lower high, lower low. We pushed down, we came into this zone right here, rejected off of it, came into this zone again here, rejected a second time, came below the lower bound, and then pushed through it and closed above it. You see we have closed multiple candles above this zone now. So a retest of this zone that previously was resistance will now act as support. And if we want to look at another example of this, here's a perfect example of this down here. So right here we had another bear trend with our high, low, lower high, lower low. We see that the price came right into this gray zone, rejected off of it, came into it again, had a little bit of a wick above it, but then rejected off it again, came up, closed above it, 2 candle closes above it, next candle comes down, tests it, barely wicks into it, and then we're off for a new all-time high. Now I am actually anticipating something very similar to happen here where we wick into this and then we go to a new all-time high. And so if we go to the lower term time frames, like the 4-hour, oops, hang on one second. Change the visibility of this. All right, go to the 4-hour time frame. So on the 4-hour time frame, you can see the whales, they want to get these stop losses right here where I have these red X's. And the reason we know that is because you can see that evident by the price action that we're seeing, where they're trying to push the price down into this zone. And the reason is because they need to fill their positions. And to fill large positions, they need to trigger stop losses. So you can see that when we were consolidating here, we were forming a bunch of higher lows. So we had a higher low here, came up, came down, higher low, came up, came down, higher low. So we never wicked below any of these lows and took out the stop losses below them. So there's a bunch of stop losses sitting below these lows. So if the price wicks into these lows, what will happen is a bunch of people's stop losses will get triggered. Once those stop losses get triggered, the whales will be able to fill their positions with those stop loss orders because people are going to be forced to sell their positions that they went because they went long right here. They're going to be forced to sell their positions. The whales will buy those positions and be able to fill a very large position, like, multiple tens of millions of dollars of positions. And then they'll be able to push the price back up and we'll have an uptrend again. And conveniently, these stop losses are very close to a bunch of different things. One, you can see the gray zone right here. the daily support zone is right around those zones, right around these stop losses rather. If we turn on the pivot indicator, you can see the hourly pivot right here is consistent with, it falls right below all three of those lows. So that's going to be a very strong support level if we come down into that. You can see where my pink lines are right here is where I'm going to be buying Bitcoin. So I'm anticipating that we're going to have a move down into these lows. I think that we'll at minimum grab this low right here, which means we'll wick below this low and hopefully into this daily support. If not, into all three of these, which I think is more likely, and that would take us down to the pink second level, which is right around 59,126, where that pivot level is. So remember, this is confluence we're looking for. So we're looking for consistency across different things to tell us the same thing. And what this is telling us, there's a bunch of things, bunch of indicators kind of, telling us that this is where there should be strong buying pressure. The reason for that is because we know that we have the daily support level, the first test of that. We have the 2-day support level, which is the first test of that. And then we have the pivot level right here. And then we also have liquidity below these lows. So that's a bunch of different things that are just telling us this zone should hold as support. And if it does not, if we get 4-hour candle closes below the pivot, that's when we should start to be thinking about, okay, might be continuing to go down and we should look for exits. Another little bit of confluence here for the bulls is the cloud. So the cloud also acts as the edges of the cloud, the green edge here and the red edge here. Those act as strong support or resistance depending on where price is. So price is above it, so this is going to act as support. If price was below it, this is going to act as resistance. So this, you can see, lines up that over the next coming like 4-hour candles, seeing a push into this zone is confluent with where the cloud rests. So this is just further confluence, another thing we can look at to say this zone looks like a potentially good opportunity to buy. Remember, everything on this channel is for educational purposes only, is not intended as financial advice, but this is where I personally am going to be buying some Bitcoin. And crazily, the target for this is, doesn't matter what the stop loss is, the target for this is, in my opinion, at minimum 69,860, which is about a 17% appreciation. And if we go higher than that, if we're going up to, like, let's say the R2 daily pivot here, that's up at about 72.1. And if we're going for the target for, now, why did I pick, let me just explain this. Why did I pick 69.9 roughly? Because of the inverse head and shoulders pattern right here, the target for that is roughly 69.9. You can measure that from the head up to the neckline here, and that gives you your target. Then you take that measurement, you add it onto the neckline, and that's how you get this target right here. Target for the ascending triangle pattern here that we have with the higher lows and then horizontal resistance is 77K. So if we take that up to 77K, which is not unreasonable for this trade, is a 29% gain. So that gives us, even if we put our stop loss below the daily level, would give us a risk to reward of about 5.3. If we take it down to the 69.9, that's still a 3.3. So no matter which way I cut this, for my personal trading strategy of support and resistance, this is a very good opportunity. If we look at the other area of confluence here is the retest of this neckline. So we'll be coming back and retesting you can either think of it as the neckline for the inverse head and shoulders, or you can think of it as the horizontal resistance for the ascending triangle pattern. So either way, no matter which way you cut it, this is a very strong area that the bulls will need to hold if they want to continue the uptrend, which I think we're looking really good in terms of the uptrend is concerned. I think that it will continue once we go down and grab these lows. So let's shift over our attention to Ethereum. Ethereum is just hit the R5 yearly pivot, which is insane. You look at where it was back here in March, it was at like $84 and just hit $25.55. That's insane. So that's the the last weekly indicator we can use to give us a resistance level. You can see that we're rejecting off of that level now, at least in the short term. Our main support level, if we do end up seeing a weekly pullback, will be this level right here. That's at around 1810. Daily time frame, we had this ascending triangle pattern right here, and if we take the measurement for that, as you can see, we already broke out of that pattern and had an extension. This is about $650. If we take horizontal resistance up to $650, that gives us about just barely above where we went to, which is about 2,600. So you can see that on the daily time frame, we had a pullback yesterday, and we're trying to hold the R2 as support here. Our main support level down here is this black candle back from April 12th, and that's where we set this higher low right here. So if we look at the price action here, we had high, low, low, high, higher low, and then higher high. So this is where people were selling their Ethereum, anticipating maybe we're just going above these highs and then we're going to break down. But you can see subsequently we had a very significant rise in price. So this is going to be a very strong support level if we come back into it. That's at about 22.12. So if we come down to that, one way you could play that is, buying the top of it, putting stop loss below, and then targeting that 2,600 level. It's about a 3.39 risk to reward, so it's pretty good. If we look at the lower term time frames, 4-hour time frame, sorry about this, just give me 1 second. All right, we will talk about this gray zone, but just give me 1 second. So this purple zone is our main support zone. Purple zone we came into once, bounced off of it, now we're testing it a second time. We might not hold it the second time. We'll see. We have 2 hours till this candle closes. We could end up seeing something where like this 4-hour candle closes somewhere where it is, comes up, hits this gray zone, and then goes through this zone. The areas that I will look to be a buyer on Ethereum, first zone is the 4-hour Kijun, which is down here at about 2247, and then the blue zone down here, which is at 2212. So we haven't touched the 4-hour Kijun on this run up in price. You can see we flipped bullish right here in the cloud, got the most bullish scenario, and then we were off to the races. But we did not touch it here, we did not touch it here, and we still haven't touched it. And you can see we're starting to form this C clamp is what this is called, and this is where we see the price action forming or not this price action, the Ichimoku Cloud Tenkan and Kijun forming a C. That you can see the blue line and the red line right here, they're forming kind of like a C, which means that we're price is kind of overbought right now. So which doesn't surprise me since we just hit 25.55, which is insane. The other thing is the inverse head and shoulders, or I'm sorry, the regular head and shoulders pattern. I'm so used to seeing inverse head and shoulders recently. The regular head and shoulders pattern right here could be potentially playing out, and that will take us down to this either the Kijun or the daily level here. So that's the first buy zone, is that 4-hour Kijun. I do think that we will eventually end up touching that thing on this uptrend. I mean, we haven't touched it once, and that's usually a really good buying opportunity whenever you get that first test of the 4-hour Kijun. Let's see if we can see some sort of yeah. So here's an example of that right here. So we got the TK cross right here. Well, that wasn't even really a TK cross. We just kind of got some expansion and then retested the 4-hour Kijun, and then we got a nice rise in price. Retested the 4-hour Kijun, nice rise in price. So that 4-hour Kijun is going to be the area that I'm going to be looking to buy, and that's, like I said, right around 2247. Why do I have this gray zone on here? So this gray zone is on the 2-hour time frame. And the 2-hour time frame is in 5 minutes about to make this a resistance zone that I'm going to short. And the reason we know that is because right here we had our bullish pattern, low, high, higher low, higher high, Candle closes above this high, and then we pushed through the zone and we rejected as support. We did not hold it as support. So now this should be resistance on a retest. So that's where I'm going to be looking to go short, and then I'll be targeting, this is just like a scalp short trade. I'll be targeting at minimum the 4-hour key June level that I said down here at about 22.47 or whatever it was. So that's all I got for Bitcoin and Ethereum. I hope it was helpful for you. If you liked this video, give it a like down below and subscribe for future educational content around cryptocurrencies as well as blockchain technology. And until next time, onward and upward.